Hey traders, this is Blake Morrow with Trader Summit, and with me today I have Bill Baruch from Blue Line Futures. Bill, how are you?
I'm doing great. Thanks for having me on again.
It is great. I was just thinking. I don't think we've been on together for the last, I want to say, about 5 weeks or so. But the last time we were on, you made a pretty big call. Crude was trading around the $65 level. And I'm like, it's trading a little heavy here. And you're like, man, it's got a lot of support. I'm a buyer towards the 200-day moving average. And boom, here we are, 28% higher, roughly. Great call. So what do you think now?
I think we're moving higher. There's room here to go. I mean, it's quite a big move in the past week. 80-20, given the recent range of consolidation through the last week, is really a little bit of a near-term ceiling. I think we can get there. I'm really anticipating this week's EIA data because the last one really wasn't very supportive. We kind of came out of it and finished the week still strongly. So I think there's room to run, and I think the winter is going to provide additional room as well.
So, crude continues to move higher. And what ultimately where do you think we're going? And I should ask you this, as it moves higher, is it going to affect consumer sentiment in any way, shape, or form? What do you think?
Yeah, to answer that question, I do think it's going to start affecting consumer sentiment to a degree. And, on top of that, you start hearing about supply chain disruptions. Look at like companies like Kohl's that were down 12, 13% last week on one day after Bank of America downgraded. So there's these supply chain disruptions for these companies, some consumer discretionary companies. And, and then if people are a little tighter in the pocket, then it could be a little bit of an issue moving forward for some of these consumer discretionaries. This is a different conversation because I actually was managing some portfolios this morning with that in mind exactly. But I could go on all day about that.
Well, let me ask you this. If I'm a crude trader, where are the levels of support? What are the levels I should be looking at to get long, to get on the crude train, if you will?
Well, if we look at where we are right now, like I said, $80 is very psychological level to the upside. 80-20 is that resistance given the recent range. I think we will be well above that in the coming months, but from here, you don't want to chase it. You really can't chase it if you're not involved. You're going to be really looking to be taking profits at this level. So as we pull back, if we do, I'm looking at that pennant we just had here through last week. That gives you an apex area around 75 and a quarter. But the previous highs is 76.90, 76.98. That area right there is also going to provide a lot of support as we move into it. So I think there's a lot to lean on when this, or if this market can pull back. What I would be more worried about is if we broke below $73. Last week's weakness, I think it was 73.12 was the low. We had a big, strong support level I put out and talked about in my morning note every single day, 73.50 to 73.98. And it didn't really stay below that. There was that one day it was battling, and it really got help from a news release on China, said that it told their producer, or told their purchasers to just secure supplies at any cost, and crude surged and reversed higher from that. So I think if we took that area out, I would be worried that the near-term move is going to have to consolidate and digest that reversal, digest that damage if that were to happen. But if we can hold 75, $76, I think that would be extremely constructive, and we can build for the next leg higher.
That's great. And I have to, once again, I have to compliment. What a great call. And for those of you that don't know how to find out about Bill's, just his morning calls, he actually puts them here on Trader Summit as well. And you can obviously get to him through the link in the description of the video. Now, one last question. I'm going to leave you. We got just a couple minutes. How do you feel about gold? Gold's been trading a little heavier as of late. There's a lot of bulls out there, but it's just not really, giving us that move higher. How do you feel about gold at current levels?
As much as I don't want to admit it at times, I'm a sort of an eternal gold bull. And, I like it. I like it long-term. I like it, in the intermediate term. I think it's really going to perform sometime in Q1. It's really going to wake up next year when we see the taper begin, and we start seeing some effects of maybe slowing growth because of the taper. But right here, right now, I did like the move that we saw last week. We tried to capitalize on some of that strength intraday, but for longer term positioning, I looked at some risk reversals with some tighter put spreads that expire for November contract, which expires at the end of October, and then turn around and use that capital to give us some call spreads for December, which would expire at the end of November. Now, with that, I designed it so where silver allowed me to actually receive money overall, and I was paying a little bit of a debit on gold and sort of not having to put any cash out there for that position. I think we'll see gold higher. And one of the things that I'm looking at this week, though, and the reason why I wasn't aggressively just getting into the market, but just sort of throttling in here, was China's Golden Week is this week, and that could historically bring a softness to the tape here in gold. But when they come out of it, it gives a lot of strength, and their holiday ends on Friday. So they're back, but also non-farm payroll is Friday. So we really got to see non-farm payroll miss or be, how these reports are digested. It's obvious there's a lot of components from wage growth, the unemployment rate, and the actual job growth itself. What's going to, how is that looked upon? And is that going to provide a tailwind? Because it's about what does the US dollar do? And we saw the US dollar ramp up pretty well into the end of Q3. It's not uncommon to see different currencies, for whatever reason, ramp up at the end of quarters, sometimes the end of months. There's just lots of positioning out there that has to be resized and redone. So the last year in Q3, at the end of Q3, the dollar ramped up and then it fell back. There's a lot obviously tying into Congress. You're seeing rates move lower, rates move higher. Treasuries are moving sharply lower. That's weighing on gold. That has to tie in a little bit with Congress too. So there's a lot of moving parts here. But like I said, I like gold. I'm looking at ways to position to capitalize on this move. And then in portfolios on the equity side, I did increase some allocation into gold too at these levels. So I like it moving out here at the intermediate time frame.
Well, that's great. And that's a great point you make about Golden Week and non-farm payroll this week at the end of the week. And, I guess the recipe would be weaker number, weaker dollar. Gold's probably going higher.
Yeah.
All right, Bill. Hey, if I'm a trader, I want to find out more about you. How do I do that?
Visit our site. Easiest thing you can do is bluelinefutures.com. We have our research page on there. You can check out our blog. It has all the stuff that we put out each day. And then you'll be prompted somewhere within there to sign up for a trial of our research. Check our research out, or just give us a call. Our trade desk is here. We'd love to hear from people and contact us. But sign up for our research. You can sign up for a 2-week trial of research. We cover everything from like you and I are saying right now: gold, silver, crude oil, stocks, but we also cover grains and softs and FX. So we have all the options out there. Check it out. Check out our research and check out our website.
Well, thank you so much for your continued support here at Trader Summit. And I know the traders at home love to hear your content, read your content on a daily basis. So thank you so much for joining us. And let's not make it 5 weeks or 6 weeks this next time around.
Yeah, absolutely. Let's catch up in a week or two.
All right, Bill. Thank you so much. Have a great day.
Thanks. You too.